Here is how Chainlink makes the consecutive steps from where it is right now to the magic $250 number. Yes, I think it's all safe to say this is an extremely difficult task, but I must say the recent developments with this project has made it very evident to me that this could actually be on the cards. And of course, today we're going to obviously go through the exact steps as to how this can possibly happen. And of course, first of all, let's punch some numbers into the chart here and just figure out what we're actually talking about. What does it actually entail, okay? So first of all, we're going to have to look at some of the past and present information and figure out just how monumentous this step actually is. So the current price is about $6, which isn't too bad because the market cap right now is about 3.3 billion. Some of you degens are going, that is way too much. I understand for some of you, it might seem a bit daunting, but again, there's some big things in the cards here for Chainlink very soon. And $3.3 billion for a market cap actually is quite tiny. Let me elaborate, okay? So the circulating supply in this case right now is about 538 million tokens, which again is about almost halfway through their entire 1 billion total distribution, okay? Now the current all-time high is $53 per token way back in the bull run 2021, and the market cap in this case was $22 billion with just under 420 million tokens in supply. So already we do have quite a large dilution, okay? A few hundred million, well, at least 100 million or so tokens have been entered into circulation. Now let's move down here and figure out how much of a difficult task this actually is in terms of the market cap growth itself. So for Chainlink to not even get to its all-time high, for Chainlink to actually hit $50, the market cap's going to have to go to $34 billion, which means, yes, that's right, from its previous all-time high over here at $22 billion, that already is quite a large increase, almost 50% increase over there, because, for those who are wondering the reason why, because the supply has increased from 420-ish million tokens to 670 million if we're considering an average of 7% year-on-year growth, okay, or at least inflation. Now, if we were to now jump to a $100 Chainlink token, what does this actually look like? Well, the market cap, obviously the supply is the same, would have to reach $67 billion, and for the magic $250 token, be a whopping $168 billion market cap, which is insane because if we go back to its all-time high, the measly 8x from the previous all-time high might not sound too daunting, but that's, guys, from its previous all-time high. We're pretty much 8xing. Now, that task in of itself, to cut a long story short, is very close to impossible for 2025, but is not impractical completely, right? It is not impossible, but it's very close to it. Because again, some of these important factors I'm going to talk to you about today can really blow up if Chainlink positions itself correctly, which it's Chainlink, so there's a good chance it will, okay? Now, if we do come over here to the current price, just to put it in perspective, that is a 51x from today. So yes, we are pretty much down here right now, 51xing, we're going to have to blow the hell up. Now, here's three steps, three particular prongs that has me actually thinking to myself, well, this is not quite impossible. It's on the cards, and I do think at least the $100 Chainlink over here is most definitely on the cards, okay? So let me explain to you, for those of you who are rolling your eyes right now thinking this guy's full of it, just hear me out for a second and just remember how large the market potentially will be in 2025, okay? Number one is absorbable demand. Right now, Chainlink, as we all know, is pretty much the middleman in between real-world things, so real-world data, into crypto, right? Pretty much transferring data from real-world useless data, whatever, not useless data, but just data, into information that can be read by other blockchains, right? Because right now, crypto is a siloed atmosphere, right? We can't actually take that data seamlessly. We rely pretty much on Chainlink or Oracle servers for this, supplying infrastructure projects, dApps, and even games through many different avenues. Of course, this includes the Oracle service, and as you can see over here, they've serviced 5.8 billion, well, over data points themselves and verifiable random functions, which pretty much is used in a lot of games, which is just a randomized function feature, right? So it's pretty much like rolling the dice feature. And we also have $6.9 trillion worth of transactional value moved in 2022 alone. Member growth is up, everything is up. Chainlink has a massive monopoly on this market, and it's got a strong embedding feature, which means you can't pull Chainlink out of crypto. If you did that, it'd be pretty well just as worse as removing USDT, probably even worse from crypto, okay? And as you can see, it is very widely used within the space through many different features, as you can see over here, okay? Some of those we spoke about, of course, a second ago. Now, I mentioned that it does have a very bad, or at least inefficient form of absorbing demand. What do I mean by this? Well, the way Chainlink currently absorbs demand through its utility is insufficient, meaning price was not reflecting the growth of the network, okay? Simply because if no one needs the tokens or it's not as important to use at every step of the network, well, then the price ain't going to go up. It's only going to go up from speculation alone. So essentially, Economics 2.0 will bring a multifaceted feature and solution to this current problem, which, by the way, is a massive, massive problem. I think they could have gotten away with it in previous bull runs, but now it's more important than ever because we are moving slowly into a phase where crypto is now actually going to be used, especially some of the things that Chainlink will be focusing on in the future as well. And they're doing this through this phase over here. Pretty much, they're allowing service providers, which are people that are like bonding or DONs, which is decentralized Oracle networks themselves, and they have over 1,000 of these, to not just rely on them anymore to have their link bonded to obviously secure so they don't like screw over the network, right? They can slash the rewards if need be, but now allows you and I to stake our link to these DONs, again, these Oracle networks, to secure them as well. Now, there is a lot more that goes into it. Again, it's multifaceted. Staking is one thing. If we go down here, we have staking down here. We have the build program, we have the scale program, we have technical innovations, a lot of technical innovations coming through. Way, way, way too much for me to talk about in this video, which is why I'll leave some links down below and on this spreadsheet in regards to what these are. But guys, I'm telling you right now, if you go and spend the time to read that, if you do have any link whatsoever, if I've ever said to you guys, buy link, NFA, of course, and you have, or if, of course, you've done it on your own terms, you need to go ahead and click these links. Again, I'll leave them down below, or I'll provide you the spreadsheet. You can just simply press on this as well, and you must read it because there is some massive news coming up, and you'd be absolutely brain dead if you didn't read that and you had link tokens, because I'm telling you, this process is being optimized. Fees are being optimized. The distribution and the fees, the staking is being created, the staking service, okay? There's a lot happening that will now require the link token, which is, of course, great for demand, of course, right? They're also, again, upgrading the network, existing services, not just tacking on new different services. Again, they are increasing these. So right now we are in V1. And of course, while we do have the same services provided in V2, they are now being optimized as well as expanding again to more services, as I mentioned before, and loss prevention or protection is enabled as well. And here's a very important paragraph from Chainlink themselves that we all need to read and understand. The upgrades to the economic structure consist of an array of initiatives that focus on improving the security and utility of the Oracle services while also reducing their operational costs, increasing the amount of user fees that support them, and enabling a broader scope of these service providers such as stakers. So as I mentioned, they're reducing costs and also increasing fees to provide a more growth structure essentially, right? So again, look at these documents, of course, if you guys wanted to learn more. This one mainly focuses on staking, which is a really, really big upgrade in my opinion, and this one kind of touches on everything. Now, the second factor here that I really need you guys to understand, this is literally massive news. Now, this kind of goes not so much into the whole utility side of it, which is the economic side of it. This now touches on speculation, right? Because this will definitely bring in the best of both worlds, but a lot of people will now be buying link tokens just because of this feature, which is their CCIP upgrade, or their cross-chain interoperability protocol, which pretty much means they're going to be creating a protocol kind of like they've compared it with TCP/IP, which is like the internet protocol, which pretty much means that anything in crypto, whether it's a private network, right, a consortium network, whether it's a DApp, whatever it may be, they can connect to one another via this one system, okay? So no longer dApps have to connect to their, main network and then transfer tokens through a pretty methodical and, let's face it, outdated system. They can actually connect from a DApp to a DApp directly through code created within a series of smart contracts through TCP/IP, okay? So as I said, blockchain A, whether it's a public or private network, can connect to, the public or private instance on blockchain B and send anything, complex data/messages or even just token transfers, and it all passes through this. Now, I love this structure, and here's the key point of difference that, stands it out from the crowd. So it's better than Wormhole, better than all these other services, because it leverages Chainlink's existing off-chain reporting protocol, or called OCR, but actually it works off the upgraded OCR called V2 that reduces on-chain expenses by 90%, but also mainly enables this to actually happen. So there's a few more features and nuances that goes into actually enabling CCIP to happen, but it is built off this. So essentially, it's an off-chain series of networks, right? Nodes that allows it to kind of process these transactions super fast, because Chainlink ultimately is a series of smart contracts built on Ethereum. So it has to leverage this. The good thing is, of course, we do have the fact that OCR is an existing system on Chainlink, which already processes billions and, pretty much has AUM, like billions of dollars, because of course, Chainlink is already used as an Oracle service processing this information. So yes, it's very, very, reputable and of course secure, but they actually go one step further. Chainlink realizes that, the whole cross-chain interoperability scene is very, very sketchy. A lot of hacks do happen. So they have a dedicated risk management network that is sole task is to find errors along the process, constantly reads the smart contracts that allow this to happen between dApps and networks, also scans the networks themselves, not just the off-chain node network, but also the networks from these blockchains themselves. And its sole task is to do that, okay? It's like a Don itself, right? But solely tasked with doing this and risk management, essentially, which is huge stuff and why I'm a really big bull on it, but they do get even better, right? There is more. CCIP will underpin a variety of cross-chain services such as the Chainlink Programmable Token Bridge, meaning this will allow dApps to natively connect to one another directly whilst having access to a wide array of services like the initial token bridge / DEX, which pretty much just means, as I mentioned down here, this just kind of goes over what I was talking about, but essentially CCIP itself will allow things like a programmable token bridge, which is pretty much an inbuilt DEX to occur, which allows these not just, complex messages to happen, aka, I can transfer tokens from, blockchain A to blockchain B and then have that interact with a series of different smart contracts, do this, do that, blah, 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 then send it all back in one transfer. But also there is an inbuilt token bridge as well. But as I mentioned, you can actually have different services built on the CCIP as well. So you can have things, as we'll touch on in a minute, like different tokenized or different real-world asset tokenization platforms or whatever you might wish built onto this as well. So it's very seamless for any application to use. And also you can actually have dApps built on the CCIP as well for that instant flexibility, okay? So yeah, guys, I mean, this in of itself is absolutely massive and you'd be crazy not to look at this and think to yourself, wow. Now, this actually is already out as of right now, and they are working with different platforms like Synthetics that actually are looking to interoperate with different features of this sort of, which are looking to enable different services like, as I said, real-world asset tokenization, bringing me to the last aspect, which is real-world asset tokenization. Now, this is something that is actually outlined by Chainlink themselves. And of course, as we know, Chainlink is designed to transfer real-world data and put that on, not just on-chain, but for the whole entire Web3 space itself, as well as the, other few features we've spoken about. But with the CCIP being created, again, you can now have different services provided. And one of these such services that Chainlink has specifically stated is real-world asset tokenization. And matter of fact, you can have different things, again, like security tokenization or anything that requires data points from the real world that needs to be put on chain, which is basically everything. So again, because Chainlink already is in the middle for all this, it's already supplying those endpoints. Hey, it can provide CCIP and now offer all these services on top of CCIP, kind of like essentially Stellar XLM works with their Soroban layer network, and of course supply this to anything already inbuilt through Chainlink, which is again highly secure thanks to the risk management network and the fact that the off-chain nodes are very reputable themselves. Now, if we come down here, for those of you who are wondering, okay, Kyron, how important is the real-world asset tokenization market? Well, as Larry Fink, the CEO of BlackRock, has stated, by the way, BlackRock has $9 trillion in AUM. I think it is the largest asset management company in the world. Now, he has actually stated, and you can watch the video when he says this, the next generation for markets, the next generation for securities will be tokenization of securities. Exactly where Chainlink is pivoting. Now, if you read the Chainlink 2023 roadmap, which I haven't supplied thus far, but I can down below, you will see when they do talk about tokenization that they are specifically focusing on getting themselves in a position where they can absorb this exact thing. Now, tokenization, as they say down here, could be a $5 trillion opportunity led by stablecoins and CBDCs by Berenstein in the next 5 years. Okay, so what this is essentially saying, and what I'm talking about with Chainlink here pivoting, is that to be an innovative company, to be a company that is at the forefront of technology and also supply and demand, then of course you need to be ready for tokenization, which definitely will be coming, as mentioned by Larry Fink, and as mentioned many, many times in that roadmap document by Chainlink themselves. So they're a very, very smart and transparent company, guys. So I'm telling you right now, they literally mention things that I talk about all the time, which is very relieving to see because they can obviously smell what is coming, okay? So as I mentioned down here, Berenstein estimates that the size of the tokenization opportunity could be as much as 5 trillion over the next 5 years, again, led by many different things, but of course, it's gonna be a massive, massive market. Whether it does grow to that size or not, it definitely will by 2030 and beyond, okay? So it pretty much will, from what they say, account to about 2% of the global money supply, again, over the next 5 years, which is about 3 trillion, but then obviously push up to 5 trillion. And for those who don't know, Berenstein has about $650 billion in assets under management themselves, which is nothing to scoff at whatsoever. So they're definitely someone to look at and listen to, okay? Now, with that said, guys, this is exactly why I'm saying, like, for those saying that, you know, $3.3 billion market cap for Chainlink or the current price is crazy, and then it has maybe terrible price action in the past, you have no idea of what is brewing under the surface. These guys haven't been working on this for the last 6 months. This has been years and years and years in the making. It's just coming to light now, well, because it's pretty big news, okay? So guys, listen up, pay attention to Chainlink. They have a monopoly for a reason, okay? With that being said, thank you all for watching this video. I hope you have enjoyed, and if you have, hit the like button, subscribe for more daily content, and I will see you on the next one. Take care.